Hello, traders. It is Tuesday, June 9th. We're almost 3 hours into trading. We've got a little bit of choppy action in the market right now. As I've been telling you for days, I think that the market is due for a little bit of a correction in here, overextended on the upside. Can you believe it? The market has rallied back to where it was on January 1st. So for the year, the market is flat. That is incredible given that we've had the largest market decline since the Great Depression. So today you can see how we had this opening gap lower. Market sold off a little bit, didn't quite get down to yesterday's low, but it bounced. And then we had a compression up at the top here, and you can see how the 10P indicator was also peaking right in here. I'd mentioned to members, I said this is a good time to take profits on your longs. See what happens. As we started to get these candles right in here was the critical moment. I said we're going to see one of two things right here. We're either going to see a lower high, and that will set up a shorting opportunity, or we're going to stack two long green candles, get into the gap even more, and continue to rally. So this was a pivotal point for us, and it was a good time to short. I did pick up a nice short on Boeing. I made about $1.75 on that short. Let's take a look at it and see how that trade set up. So we'll go into the 5-minute chart, and what I was looking at was you can see here that the stock had already spiked and it had peaked. This dotted line right here lines up with Boeing. So you can see 1, 2, almost 3 candles to the downside while the market is still making a new high of the day. This is relative weakness. This told me that the stock was going to be going down. So I shorted Boeing. I bought it back in here as the market was starting to go down. Why do I take profits there? Now, I get this question all the time. Pete, how should I set my targets? What should I look at? I always look at the market. I always watch for relative strength. When I start to lose relative strength, I buy the position back in on my shorts. So here we had the stock declining, and here we had the market actually starting to finally sell off. But the stock had a couple of tails under body, had this green candle right in here, and that told me that with the market going down, the stock was ready to bounce a little bit. So I took profits on the trade. That's how we do it. I always watch the 5-minute chart on the S&P 500 and I compare it to what the stock is doing. I'm using the stock as a surrogate market position. When it loses its relative weakness, I buy it back. I take profits. I look for another opportunity. Just keep moving on and moving on. So let's take a look at the market overall and see what we might have going on here. We've got an FOMC meeting tomorrow. Everyone's expecting it to be super dovish. If the economy struggles, then we can expect the Fed to jump into action with additional quantitative easing or loose monetary policy. So I think that it's going to be a non-event. Typically, everybody waits for the Fed and they wait for the Fed and nothing happens. But I think this time, no one's really expecting there to be any big news. So we've got this move higher yesterday that I pointed out. And if I draw this trend line and I connect this top right here to this top right here, you can see how it's going to extend through. This is an upward sloping channel and we've poked through the upper end of it. If I put up some Bollinger Bands, you can also see that the market is very, very extended. It's at the 2 standard deviation Bollinger Band. Okay, so it's overextended. That means that we could see a little bit of a pullback. I'm expecting one back into the middle of this channel. Certainly we should be able to find support at SPY 300. You can see that's where the upper trend line, or excuse me, the lower trend line is starting to extend to. As long as 300 is intact, I believe that you still have to favor the bullish side. You don't want to be shorting this market until we get a technical breakdown, and that would be a significant technical breakdown. That would also, and there's just an alert that I had posted, and that was an alert. I had my downside alert line set, and I had mentioned to everyone in the chat room, as long as that downward sloping trend line is intact, I'm going to be favoring the short side. If that downward sloping trend line is breached on the upside, I'm going to start favoring the long side. Let's go back into the 5-minute chart because we have an S&P 500 trade that we could be doing right now. So I'm going to go into the 5-minute chart. You can see how this downtrend line was broken just now. And look at this. We've got a bullish 10P cross off of a deep trough. That is a good sign. This is a chance for us to get long. It just so happens that we've got some stocks that I've been watching. So I'm going to put them up. Facebook is one of them. Love Facebook. You can see how it found support right here. It's starting to move higher. Look at the gains that this stock has had today. We'll talk a little bit about that as well. You can see how the stock is pushing higher, trying to make a new all-time high. If it closes here, that would be a new all-time closing high for the stock. Another really good stock is Apple. Look at that baby go. Some of you took that trade from Sunday night. You got in yesterday once the market established support. I covered this in my video yesterday also. And we had the S&P 500 yesterday gapped higher. It did not hold that opening gap. It came down. Then when it made a new high for the day, and with Apple showing relative strength at that point, that's when you would have wanted to enter the Apple trade. And so there is your entry point when Apple makes a new high of the day. As I had mentioned in yesterday's video and the Sunday night video that I posted, if Apple closes on its high of the day and the market closes on its high of the day, there was the close for the market, there was the close for Apple, you can carry some of the position overnight. Not all of it. Well, why would you be so conservative, Pete? I feel that the market is in overbought territory. I feel that at any point in time, we could see a nice round of profit taking. Bullish sentiment is off the charts. We haven't seen readings like this in over 2 decades. I believe that in the last 10 weeks, not one of the S&P 500 stocks is lower. That's also very unusual. So, bullish sentiment off the charts, I think we're going to see some profit taking. Well, what might spark that? I don't know. All I know is that once the profit taking sets in, then sell programs start to kick in, and then bullish speculators get flushed out, and that's what drives the market back into its upward sloping channel. So if we get really heavy selling, and if the news is warranted, I don't know what that might be, a new trade war with China, who knows, resurgence in coronavirus, could be anything. But once we get that selling, I'm expecting that 300 level to be tested. And for swing trading, that's when we want to start doing our swing trades again. But right now, we've got 3 swing trades, 3 bullish put spreads on. They're trading for pennies. 2 of them will expire Friday, and the other one expires June 19th, and then we're flat. I don't know that I want to take any positions right now. The problem is you've got to go so close to the money to get the credit that you want that any little market whiff and boom, you're right in the money, and now you got a problem. So as the market pulls back, instead of having to manage losing positions, I want to be sitting on the sideline. I want to have clear, objective viewpoint on the market. And so instead of managing losing trades, I'm going to be looking for opportunities. That's how I like to play it. Well, gee, might I miss a little bit of upside to this market? Yeah, it's very possible. I don't care. I need to be very, very disciplined right now. Everything is telling me that I need to be disciplined. So I'm in a waiting game on my swing trades. I'm going to show you a couple of bullish swing trades. Going to show you a couple bearish swing trades. So in any event, on Apple, if you did hold overnight, your remaining position, you're doing beautifully on that. That was really, really nice call. I saw that Friday when I was watching for our option lotto trade. Apple stuck out like a sore thumb. I knew it wanted to move higher. That's why I did the Sunday night video, which, by the way, if you're not subscribed to my YouTube channel, make sure you subscribe and turn on your notifications, because then you'll never miss a trade like Apple. You'll be notified. You'll know when those videos are being recorded and posted, and you'll be able to take advantage of that trade. So I like Apple. I think Apple still looks really, really strong today. I'm also going to take a look at Amazon. It's also making a new all-time high. And there you can see how strong it's been. It's been on all of our searches this morning. Go into some of these bullish searches like heavy buying. Look at this: Amazon, Apple, Facebook, CHWY. I played that one earlier today. Made really nice money on that. That was a post-earnings play. Look how easy it is to find these. I've got a handful of searches. Look at these stocks go. CLDR also made some decent money on that earlier today. I love this reversal in here. Bought it in this compression. Sold it for a 30-cent gain in here. Came right up on our searches. Heavy buying, relative strength 30, bull run. These are all beautiful, beautiful searches. So it's that easy to find our bullish stocks. So Here are the stocks that I like right now. I like Apple, I like Amazon, I like Facebook, and I also like Tesla. And I'd mentioned Tesla to you on Friday. That has been on a tear. That was the featured stock last week. And you can see huge move higher from $800 to $943. So beautiful trade there. You might be noticing something strange when I told you which stocks I really, really like today. All of them are mega cap tech stocks. Let's bring up the QQQ, see what it's doing. So we got the S&P 500 right here. We're going to put up a 5-minute chart on that. We've got QQQ right here. Look at it push higher. New all-time high already. And look at the relative strength that you have. So here you've got the S&P. Look at this pullback over a prolonged period of time. You see how the QQQ was already bouncing before the SPY made its low, and notice how it is right off of the high of the day. S&P 500 nowhere near. So what this tells me is that in the last 2 weeks we've seen a tremendous rotation out of some of the tech stocks and into some of the laggards. Well, today the laggards are down. Let's click bearish. Let's go into heavy selling and look at these laggards right at the top of the list. So easy to spot. SPG, Simon Property Group, the largest mall operator in the country. You can see the weakness there. Look at that relative weakness. Yeah, baby, that's the one I'm going to be shorting. Absolutely. Below the 100-day moving average, perfect. Now I've got that resistance I can also lean on. Win, same deal. Test the 200-day moving average, closes above it. Nope, can't hold it. It's pulling back. I'd be a little bit more careful on Win than I would be some of the domestic casinos because China has been open much longer than we have been. I think that domestically you're going to see those casinos still drag for a while. So PENN, CZR, Caesars, those might be better domestic plays if you want to short the casino stocks. But I think it's okay to be looking for shorts on a day trading basis. Given the huge market strength that we've had, I would avoid swing trading from the short side. You can sell some out of the money bearish call spreads on a stock like Wynn. I think Disney sets up well for a short also. Theme parks in the U.S. still going to be very slow reopening. Yes, theaters are starting to reopen, but I believe they can only allow 100 people in a theater, something along those lines, which is about 20% of capacity. Going to be very hard for movie theaters to make any decent money with that type of low capacity. But they will eventually ramp up. Disney will be able to release some of its movies, but the theme parks, I think, are a long way from reopening. ESPN, no sporting events yet. So I think Disney's probably a decent bearish call spread candidate, probably up around the 130, 132 level, and trying to sell a bearish call spread a couple of weeks out. You can see how the stock hit that 200-day moving average and it came off of it. I'd still wait for a little confirmation from the market to make sure that the market is not advancing. And that'll give you another day or two to observe that 200-day moving average. The more days we close below it, the stiffer that resistance becomes. So on the short side, I do like Disney short. I do like Wynn short. I think some of the energy stocks have also gotten way ahead of themselves. There's SLB right here, and you can see how it's gotten through the 100-day and now it's testing it. It's probably going to fall below it, and if it does, then it's likely to fill in this gap. And while it fills in that gap, you'd probably have a nice opportunity to sell an out of the money bearish call spread. So you can certainly play it that way. I feel that in the course of the next week or two, we should start to see some market selling pressure, at least resistance, at very least we start moving sideways. Let's take a look at the number 3 candidate, IBM. I tried shorting it earlier this morning. I think I lost a dime on it because it just wasn't getting the follow through that I needed given a bearish market move. 1, 2 tests of the low of the day, but you can see this downward sloping trend line. As a short seller, you want to make sure that this trend line is preserved. And if you get a decent market bounce and the stock hits resistance right there, probably set up for a good short and a chance to take out that low of the day. So right now you can see how that cross was good. You can see how we've been doing this video for about 10 minutes plus, and you can see how we're starting to grind higher. This 10P indicator is all I use to trade. It tells us where we need to be positioned every day on the long side or the short side. It tells us when we should be taking profits. You're long in here because you've got a bullish cross. Get this big spike. You should be taking profits up in here. Now we get a bearish cross. Breakdown right there technically. Now you should be short. Down in here, you should be taking profits on your shorts as that indicator starts to get pummeled and it starts to cross over. Now you've got a downward sloping trend line that's been breached to the upside. Okay, now I can start looking at my longs. That's how we do it all day long. So we'll be trading Apple, Amazon, Facebook, Tesla from the long side. On the short side, we'll be looking at Disney, Wynn, IBM, probably a couple of other energy stocks in there as well. As far as leaving you with an option trade for today, I think that I would probably favor selling an out of the money bearish call spread on Disney. I think that's probably one of the better trades that I see setting up. And again, I'm saying that on the short side because I feel that this market rally is getting very overextended. And I feel that it's going to have a very difficult time continuing that pace, continuing to rally. I feel that bullish speculators need to be flushed out in here. I don't know if it's going to happen today or tomorrow or a week from now. I just know that from a price standpoint, the market would do well just to tread water here. And that bodes well for any kind of bearish call spread that you would sell out of the money. Just make sure that you have firm resistance in place. If that stock breaks through that resistance level, and I'll use Disney as an example, if Disney happens to break through that 200-day moving average, then what you have to do is you can leg out of it, you can buy in your short call, and you can let your long call run, because once that technical resistance has been breached to the upside, there's a very good chance that the stock will continue to run. The way I play this is I try and sell my long call for the same amount of money that I purchased my short call for. That's how I leg out of these trades, and I try to make sure that I'm able to do that in the same day. So I did post a couple of videos a week ago or 2 weeks ago that show you how to leg out of losing credit spreads. So please make sure to watch that and you'll have all the information that you need. That's all I've got for you today. This is a fairly low volume market right now. We have it floating higher on dismal volume. Let's put that SPY chart up here so we can see the volume. You can see declining, declining, declining right in here. We had a decent spike last Friday on that unemployment number, but apart from that, you can see the volume's been low. This is a low probability trading environment. Keep your size small, reduce your trade count, wait for the market to show you what it's going to do next. I believe that we're maybe tread water for a little bit, but then we should start to see some selling. Bullish speculators have got to get flushed out. Things are really, really heating up too much right now. We're seeing a lot of the laggards like Simon Property Group rallying like mad. RCL, CCL, those are the cruise lines, rallying like there was nothing wrong. I think it's going to be quite a while before travel and entertainment recover. If you like this content, please give it a thumbs up. That way I know I'm doing something right. Also, make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. Promise I'll always have some actionable trade ideas for you. Thanks. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.